of the things I wanted to ask about, Jim, clearly Powell and the others say, we don't want to get involved in the politics, we're just going to do our job. But at the same time, a very common theme, not just in this panel, but comments from Jerome Powell in recent months, is that the fiscal path is unsustainable. And he said those words implicitly again now. I mean, is that in itself getting involved in the politics?
Yeah, I think that's been a refrain probably of Fed chairs for a long time, and nothing's different today, except that the problem is worse. I think both political parties have decided, or members of those parties have decided, that they can't win an election by campaigning on fiscal rectitude, and that's very unfortunate for the country. So I don't know how we're going to recover this. However, I have emphasized in many different forums that divided government is a real possibility here, and I think markets are betting on divided government, and that would help you because a sweep by either side would probably lead to quite a bit more spending.
We actually have a segment from earlier with Powell addressing staying out of the politics. Let's take a listen.
We've been given this great responsibility and great powers, and really important that we get it right. And we've been told to stay out of politics and just do your job, and that's what we do. We don't try to get involved in issues that are not our issues, and in particular, we're just focused on our goals and getting through that. And if we do that and do it well, I will say in the United States there's very broad support for an independent Fed in both political parties on both sides of Capitol Hill and everywhere. I don't think that's really in question, as long as we just are seen to be doing our job and staying on task at all times.
Jim, how far do you think he'll take that? Will he not want to even show a suggestion that they're getting political and thus wait until after the election, or not? You
mean for the September decision or other decisions before the election? I
exactly.
think that. Yeah, I mean, I think that the committee would feel confident to move, making an ordinary policy move with the data in hand, and I don't think anybody in the political world would worry about that. So I think, if you look at the history, the Fed has been willing to move during an election cycle. So I think that's a definite possibility. But to get to a September move, they're going to have to see continued good data on inflation so that they can be confident to make that first move. I think just the notion that somebody's going to win an election because the Fed did something in September, I don't think that's how American politics works. I don't think that's where the median voter is. They're thinking about a whole host of much broader issues than a tactical move by the central bank.
And while they were on stage, Jim, the job openings data, the JOLTS, came out showing quite the resiliency in the jobs market, which kind of, dots this idea that the labor market remains strong. How do you think that plays a role in some of the discussion they were having with regard to the ability to orchestrate this very gradual slowdown in inflation while keeping the economy on a stable path?
Yeah, it certainly suggests that the labor market remains relatively strong. One statistic I've been looking at, which no one looks at, is the year-over-year non-farm payroll growth. So a year ago, if we were sitting here, that number would have been 2.5% growth over from the previous year. Right now, it's 1.75%. It's basically a declining sloping line if you look at the picture. So, that kind of gives you the sense that there is slowdown, but the chair does a great job in saying that that's not really slowdown, that's normalizing the jobs market. And the vacancies to unemployment ratio, which at one time was 2 in the U.S., 2 jobs for every unemployed worker, now down to 1.2. That's still a high number, actually, but it's about the same as it was pre-pandemic. So still a good jobs market. That means that the committee doesn't have to worry too much about that side of the mandate. They can worry mostly about the inflation side. But I would just say for your group here, the main issue for the Fed is, I think, we were sitting here last year at this time with 200 basis points higher of inflation than we have today. And we haven't found, if you thought the policy rate was right when inflation, core PCE inflation on a 12-month basis was closer to 5%, then how can you claim that the policy rate is still okay today with, with 200 basis points left? You're only 60 basis points from the inflation target. So it seems to me like the Fed needs an opportunity here to get going on its easing program, and so we'll see if that happens.